If you saw the TZA stock today, you saw it jump from somewhere around $4.20 to somewhere around $35. So I'm going to cover why this happened. Fundamentally, it's a reverse split, which means that every 8 stocks of TZA are now equivalent to one of the newer TZA stocks. So right before the split, each stock was priced roughly around $4.20. Now 8 of these will combine, and that's how we are getting $33.60 starting from March 1st. Now, as of now, the stock has moved up to $35, but this is the new figure you will have to adjust to if you are interested into TZA. I wanted to cover a few more topics of about how to play this stock because I have been investing into this stock, and I wanted to point out a few more things. So fundamentally, this is, as you all know probably, it's a direction daily small cap, the bear 3x stock, which means that if the small cap stocks, they are down by 1%, then TZA will be up by roughly 3%. So that's the fundamental thing you need to keep in mind. Now, if you look at the today's Russell stock that ended on March 2nd, 2021 at 22.41, and TZA is at $35.5. What I want to point out that the peak that Russell reached, I think a couple of weeks ago or so, it was 2300, which means that at that point of time, I was monitoring it, and TZA was like $4, which in today's terms is close to like $30 or $32 here. So short term, you can think of this stock to be had a lower kind of level of lowest possible level of 32. But as you know, stocks can overshoot beyond their limit, so you should not be surprised if it's go even below about 2300, and therefore TZA stock could go even lower than 32. With that said, because there is going to be some more money pouring in terms of stimulus and these things, we could see actually a Russell going a little higher again to 2300 or a little. At the same time, I do not expect how it could go much higher than 2300 because that's we have probably exhausted all the cash money available with all the investors. So the upside chances are there, but that upside chances are going to be very little further upward movement, which means that TZA has a very little chance of going much below 32. Lowest I expect is between 25 to 30, but I would say 30. And I cannot predict when that lowest could be or how much low it could go, except that 25 is, in my opinion, is the lowest possible value. So that being said, that one of the strategies for the TZA could be to sell your puts, which means that maybe you can strike price of $30 and then set a date of like March 19th or maybe April 16th or a monthly 1 to 1.5 months, and collect the premium, and then you can make like a couple of percentage point every month, which is not bad thing to do. And once you get that share, you can again do a covered call sell. One of the things, good thing about TZA is that I saw my IRA account, and ordinarily the IRA accounts do not allow the share shorting. And we know that at this point of time in the stock market, it's an equal chance that the stock as a whole can go up or go down, with possibly in the midterm more chance of going down. So how do I hedge my investment in such a way that if the overall market goes down and my stocks in other stocks that I have invested, obviously they are going to be down, but there will be something that should be increasing if I know that it's going to be going down. So I put some of my money in TZA put sell, and I don't know how they do, but they did allow it to although they should be not be allowing ordinarily the exchange traded funds, which are complex exchange traded funds. And if you are not an ordinary stock market specialist, you probably may have a hard time understanding this. For example, I have an IBKR account which allows pretty much everything, including naked call options and call option selling. But it did not allow me the TZA share until I went into the settings and enabled the specialized ETFs and so on and so forth. So with that being said, I wanted to just cover my thoughts on TZA, explaining the but before I end, I wanted to talk about the options. If you had the options before March 1st, either a call sell or a put sell or a call buy or put buy or whatever, and they will now have a new name called TZA1, which means that if you already have those options, you can close them with the same number, but you cannot open a new position probably using TZA1. Existing positions could be closed with this sticker. And for example, if you had a put sell with TZA earlier and the stock get allotted to you, then that stock will again get converted in this reverse split ratio and you get the actual stocks. So just to recap, if you, for example, earlier had 1,000 shares of TZA in your account, you will see now that it's only 125 shares. And if you, for example, if you have like something like only 100 shares, then if you divide that, you get a fractional number of shares, and then you will see that it rounds that off. And I'm not sure exactly how they work out the fractional part. Probably it's a very small amount, we can ignore. Probably there's a rule that you get the cash for that, but you can ignore that for that. I hope these things helped you. If you have any comment, just write it into the comment section below. Thank you.